Now, my main focus point on InvestTalk today is about nuclear energy, and it's experienced a huge revival as of late, the biggest in decades, and the sector as a whole is going to produce record amounts of electricity this year. And investment in nuclear power has increased by about 14% annually over the past 4 years. That's up from only 1% prior to 2020. Okay. And it used to be about climate goals, that this was a clean way to produce power. But it was always scared, environmentalists were scared off of the risks around nuclear meltdowns, etc. But now the driving force is less about climate goals and more about massive power demands around AI and cloud infrastructure. Now, overall, data centers consume about 4.4% of U.S. electricity in 2023. That figure is expected to go to 12% by 2028. And what we're seeing as of late is that these hyperscalers, your Metas, your Googles, your Amazons, your Microsofts of the world, they are signing nuclear power purchase agreements from companies like Constellation Energy. And they're clearly trying to find clean, consistent base load power to power these facilities. And the head of global energy at Meta, think about that. Meta has a head of global energy. What he said was, quote, "Securing clean, reliable energy is necessary to continue advancing our AI ambitions," end quote. So it's clear that this is only beginning because of the growth of demand of AI is also only beginning. So the question is, how do you gain exposure to this space? Now, this first, I wouldn't say the simplest way. The riskiest and most upside, the stocks that have the most upside are probably in the uranium space. Okay, and that would be the biggest we own for clients, Cameco, but there are others out there. They're the world's second largest uranium producer. But then you have utility companies like Constellation Energy. They're the largest owner of nuclear plants in the United States. Then you have companies like GE Vernova. They also fund they have products for the industry of build out of traditional nuclear plants, supporting, maybe reactivating some of these plants, servicing these plants, etc. But there are many others out there that cover this space. We own some others that are smaller, so don't think these are the only ones. You have to do your own research and find the one that makes sense for you with the best growth and value, etc. But those are, from industrial to utilities to obviously uranium miners. Those are the main ways of individual companies that probably produce profits and maybe pay dividends that you can go out there and buy. Now, there are other ways to gain exposure. One would be nuclear power ETFs. So the top two are URA and URNM. URA has 51 holdings, has uranium producers as well as component manufacturers, service providers, etc. And Cameco's about a quarter of that fund, so you're getting a lot of exposure there. The Sprott Uranium Miners ETF, URNM, that has 38 holdings. Those are all uranium miners that produce at least 50% of their assets are headed towards uranium mining. Okay. Then there are small modular reactor companies. Now, these are very high risk because there hasn't really been large-scale rollout of these type of products. And basically, the whole goal of this is saying, hey, we're going to create this small power plant that we can build in a factory that is powered by uranium and ship it and put it in place, maybe next to a AI data center, for example. The issue with it is that there are 80 different small modular reactor designs in development. 80. And the reality is that most likely there will be one, maybe two different designs that will actually make it to market and create scale, meaning it's so cost effective and efficient and safe that this is the best design that's out there. That means the very small percentage of those 80 are actually going to be good investments. The vast majority are going to be throwing money after something that just doesn't really gain traction. So that's the biggest worry here with investing in that space. It's extremely high risk, and you have to go into it knowing that. Now, what are the risks around the space in general? We know the long-term demand, the secular trends there. But what are the short-term risks? Well, obviously, construction and development, you can certainly run over on costs. High concentrated supply chains. So most of the uranium in the world is produced outside the United States. Kazakhstan accounts for 43%, so that's an issue. And then political support can wax and wane. So understand those risks.